welcome to Money, 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 your weekly personal finance date with me, Surabhi Upadhyay. It's tax filing season once again. Now, this year, the Central Board of Direct Taxes has introduced new ITR forms which incorporate several key changes. So, if you have not filed your income tax return so far and are perhaps confused about how to begin, where to begin, worry not, because help is here. Today I have with me Mayur Shah of EY as well as Akhil Chandna of Grand Thornton to demystify all the steps that you need to follow to ensure that your ITR is filed well before the 31st of July deadline. Gentlemen, thank you very much for being with us on the show. So it's always slightly confusing. The conundrum is always there, and most of us end up waiting till the last week or so. So let's get the initial things out of the way first of all. Akhil, I'll open with you. This year, the forms themselves underwent some changes, but are these marquee changes or only sort of minor cosmetics here and there?
Surabhi, well, the ITR forms have seen a lot of changes this year, specifically from a disclosure requirement perspective, whether it's for a salaried class or for the people who are covered under presumptive taxation scheme, the investors in dealing with, shares of unlisted company. And the government has come out with a lot of details from a GST perspective, especially for the people who are filing ITR 3 and ITR 4 for individuals who have income from business or profession. However, we must acknowledge the fact that CBDT has done a great job by notifying the new ITR forms well before the commencement of the tax filing season, that is in the month of April itself. This reflects their commitment to give best of the services to the taxpayers. But as you said, the forms has seen a lot of changes in all the ITRs.
Okay, fair enough. Mr. Shah, opening thoughts. What have you made of all the changes? I mean, ITR 1 being the most important one for most of the salaried individuals.
Yeah, so, if I look at it, government is looking to automize everything. And therefore, the changes which are being made is in order to implement automation as far as return processing is concerned. So, so this year they have been asking for more and more details. If we are looking at ITR 1 details, it is covering only, income from house property and income from salary. In that situation, if you see the salary which is being exempt, like house rent allowance, which is exempt if employee is paying rent to a landlord. Similarly, conveyance allowance or any other such allowances which are there, which are being exempt from tax. Sure. Now we are required to submit even details in relation to that, how it has been calculated, what is the amount.
Yeah. So actually, I want to go all through all of these changes step by step. So let's do one thing. Let's take it form by form. I mean, there are 3 or 4 key ITRs that most individuals like you and me end up using and filing. So let's begin from the beginning, which is ITR 1, the Sahaj form. Now, this is a simple one-page form that we are talking about. It covers, I think, the salaried class, largely speaking.
Sure.
But this year, non-resident Indians have been forbidden from using this form, right? It is only for resident Indian salary taxpayers.
That is correct. And for them, they have to use either ITR 2 or ITR 3.
The non-resident.
Non-resident.
Right.
And only resident person can use the search form. And especially the persons who are having income below 50 lakhs. Okay. And those people only can use search form, which is ITR 1. Okay.
So once again, just to recap, first of all, the applicability of this form. Who can use ITR 1? As long as you're a resident of India and you're a salary taxpayer, and your income does not exceed 50 lakhs. That's an important threshold to keep in mind. Akhil, let me bring you in on this. There are certain other limitations to ITR 1 as well, right? I believe if you, for instance, if you have capital gains, if you've sold off a house in a year or you've sold off shares in a year, then this is not the form that you can use because capital gains as a disclosure is not made in ITR 1. Am I right?
Yeah, you're right because, they have, as Mr. Shah said, that only for salaried employees and people with one house property and income from other sources, and who has a threshold limit of less than 50 lakh rupees can only file ITR 1. So if the people have capital gain tax from any transactions, so they have to either opt for ITR 2 or for that matter ITR 3, depending upon their income from sources.
Okay, so keep that in mind in case you have capital gains and this is not the form for you. You have to look at Form 2 or Form 3 or the other forms. But if you don't have capital gains, then you can look at this. Of course, interest income, the interest that you're earning on your fixed deposits, etc., that can be taken on board in this form. One more clarification, as Akhil also mentioned, as long as you have income from one house property, a single house property, you can use ITR 1. Absolutely. If you have two houses, more than one house property, again, this is not the form for you. But let me understand what the taxman means when you're saying income from one house property. Does it mean that this is a house you necessarily reside in? Or could it be that you yourself are staying on rent, yet you're generating income from this house, which might be put on rent itself?
So your question is either it is self-occupied or let out. It really doesn't matter.
Okay.
So far as you have one house property. The other important aspect is that if a person is earning dividend income more than 10 lakhs, in that situation also ITR 1 cannot be used.
Oh, so if you're a high dividend earner, you have lots of investments in shares and your dividend income is exceeding 10 lakh rupees in a year,
then this cannot be used.
Yeah, so ITR 1 really not for the lucky rich folks. Let's just put it simply. Now let's come down to the changes, gentlemen. The changes that ITR 1 itself has seen this year. And Akhil, elaborate on some of the points that were discussed earlier, because it seems now there are many granular disclosures required with respect to your salary as well. Details like HRA, other things like conveyance, etc. So what are these additional disclosures and where in the form do they need to be made?
So, in ITR 1, as you rightly said, that this year there's a salary breakup details which is required to be provided and furnished by the taxpayer. So, as we work and we have a Form 16, if you've seen the Form 16, there are a lot of taxable allowances, perquisite, value, profit in lieu of salary deduction under Section 16. So earlier there used to be only income under the head salary which needs to be reported in ITR 1. But this year the government has come out with the changes of asking for each and every detail, so that the purpose is to reconcile the details furnished by the employer and what employees are furnishing in their ITR. Similarly, in house property as well, this year they've come out with a breakup of gross rent, local taxes paid, deductions, and interest on housing loan. So these kind of issues has been these kind of disclosure requirement has been asked by the government this year. And the other changes which government has come out, which are common, I think, maybe in all the ITRs, is a verification of tax return. So earlier there was no required to mention in whose capacity the tax return is filed and whether the taxpayer is competent to furnish the tax return in that capacity. So that's one of the changes in the verification of tax return. This year, the cash deposit requirement, which was there in last financial year because of demonetization, has been taken away because now it's not relevant for the current tax year. So these are the few changes which are very, very relevant from ITR 1 perspective.
Okay, so fair enough, several important changes. The good thing is, of course, that one disclosure requirement that has been done away with, as Akhil explained, is the details of the cash that you were depositing in your bank accounts that was required to be furnished during the demonetization era, but not this year. But Mr. Shah, just coming back to the additional disclosures with respect to house property, if you can just tell us the details there. Because I believe that, for instance, if you are earning rent above 50,000 rupees per month, and that was a provision introduced in last year's budget, then your tenant has to deduct some tax at source. So are those the details that you need to file in? What are these additional disclosures with respect to house property?
Yeah, so those details are also if a person has let out his property and so the TDS which he has to claim as a credit for against the taxes which is required to pay needs to be disclosed. In addition to that, if a person himself is paying rent to a landlord and if that rent is exceeding 50,000, then he is also required to deduct TDS. And that disclosure requirement is also incorporated in this form as well.
Okay.
So it is apart from he's renting out and the TDS thereon.
Sure.
Also when he's paying rent and he is deducting TDS, that also required to be disclosed in this return of income now.
Okay, fair enough. So that makes it more clear now. On that note, we need to take a very quick break. But we've only gotten started. What happens if you have capital gains? Then which is the form that you need to file? What happens if you're not a salaried employee? If you are a professional and you're working on contract? Then which is the ITR form for you? The conversation continues.